Is what happened in Saudi Arabia and what's happening right now with oil prices and energy stocks enough to derail the move that we've seen towards record highs again?
It could derail it for a few days, but longer term, there are much bigger macroeconomic issues here that it plays into. So you look at the direct effect of basically the biggest supply shock we've seen in oil, and it does affect energy prices directly, of course. And that generally is a tax on consumers and corporations. And so we could see the hitting of the brakes in the economy because of that. But really, the bigger issue is that you look at these supply shocks, and they play into the larger macroeconomic turmoil that we're seeing. And so you have the Federal Reserve meeting this week. They're basically playing whack-a-mole with trade headlines, with a U.S. economic slowdown, and now with oil prices. And so that could play a major issue. The silver lining, if there is any, is that the energy stocks in the U.S., they're down 18% year over year. And so if anyone stands to benefit from higher oil prices, it could be the energy sector.
What's interesting about that is over the course of the past maybe month and a half or so at this stage, we've seen a bottoming, or seemingly a bottoming out process in energy. Not necessarily in oil prices, but certainly in energy stocks. Exploration and production companies, oil services companies. Is this enough now to reinsert energy as one of the leadership parts of the next leg higher? I talk about it because it's the rotation everyone's been mentioning over the course of the past few weeks.
Yeah, well, there are really two factors here. One is just how much they've lagged the broader market. They're the second worst performing sector this year, up only about 5.5%. And so just on a beta basis, that should reverse itself if there's any impetus or catalyst for helping out the sector. And the second point is, to what you're saying, essentially higher oil prices could be that catalyst, and we could see that across the board, across energy stocks. This is very much similar to a reversal of what we saw back in 2014, 2015 when energy prices plunged. If energy prices can increase from here, then it could bring some love back to that sector.
So from a macroeconomic perspective, globally speaking, there has already been a concern about slowing demand, slowing economic growth, especially in places like the emerging markets. Is it fair to say that if oil prices do sustain these gains and trend higher, that those emerging markets are going to be disproportionately hit because of this particular move in oil?
It's hard to judge emerging markets as a whole. So if you look at Latin America, South America, those countries within emerging markets, there could be a more mixed benefit. We generally looked at those as oil exporting countries, although that composite has shifted over time. But I think that's more of a mixed bag. In Asia, however, those are generally oil consuming countries. And to the extent that oil prices do spike up significantly, you could see a negative impact there. And so emerging markets, over the last couple of years have been challenged. And so this does probably have an effect on the demand side there as well.
So as you look towards what clients are asking you in terms of how they should be positioned, looking at all the asset classes and different types of moves in markets that we've seen, how exactly would you position given the fact we're near record highs in stocks and we have some of these geopolitical risks at play?
Yeah, so to the typical diversified investor, we still like equities here, broadly speaking, both U.S. and abroad. However, the challenge is that a lot of the enthusiasm we've seen over the last, let's call it 6 months, has been around central banks. And so both the Fed and the ECB action last week have basically created this renewed enthusiasm within equities across the board. And we think that's kind of a challenge. The Fed can't solve all the world's issues. And even if they do, and they probably will cut by 25 basis points this week, that probably has very little impact on the actual underlying drivers of the economy. The fact is that the economy is slowing down. We're seeing that across the board. But we're not at a point where we think a recession will happen just yet, especially not within the next 12 months.